Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, January 28th, 2022. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. We're going to start off with a one-year weekly candlestick chart of the S&P 500. The two moving averages, the green line is the 10-week moving average, and the blue line is the 40-week moving average. For the week, the S&P 500 was up 77 basis points, and we closed at 4431.85. But very, very volatile week. And let's take a look here at a few things. So the first thing I'm going to do here is bring up my annotation tool, and let's take a look at the 4350 level here, guys, because this has been a really, really important support and resistance level for quite a while. So the first line I'm going to drop on here is that level. And what we can see here is clear back in June is the first time that we got up ever to this 4350 level. And you can see that since then, right, it has been a very, very important support and resistance level on the S&P 500. First off, acting as resistance back here in June, as we might imagine. But you can see that we've pulled back to this level numerous times with some trading below it intra-week. But on the weekly closes, you can see that the last time, including this week, guys, the last time we've had any weekly close below 4350 was clear back here in July. All right, so it underscores the importance of this 4350 level. Now, if you saw my video from last week, and if you haven't seen it, I would encourage you to go back and watch it, because I went through some downside possibilities on the S&P 500. I talked about this 4200 level, which is the next level of support, possible support and resistance below where the 4350 level is. And you can clearly see we came down to this level. Now, the low for the week, 4222.62, all right, and that was right here. But you can see that the majority, right, the entire body of this candle on this weekly candle over on the right when my cursor is circling is above the 4350. So we had the tail of the candle dip all the way down to 4222.62. But the majority of the trading this week above 4350. Again, we closed at 4331.85. So, you know, and just barely below the 200-day or 40-week, right, 40-week moving average, since this is a weekly candlestick chart. It's the 40-week, but pretty equivalent to the 200-day if you were looking at a daily chart. So it really just shows how important, guys, this 40 and just how resilient this 4350 level has been for about 6+ months now. All right, so as long as we stay above 4350, especially on a weekly close, we're going to be okay. It was definitely an uncomfortable week, and we'll take a look at a couple of the charts here in just a second, but it is going to be critical that we hold on to this 4350 level, because if the 4350 level doesn't hold, and especially on a weekly closing basis, then 4200 plus or minus is going to be that next support level. And let's just back this chart up here about another year. So we'll go back to make this a 2-year chart so I can show you this. But 3800 plus or minus is going to be that next level of support. And to get more, there's not a ton of support there, but there's definitely some support around this 3800. So if 4200 right in here doesn't hold, guys, then 3800 is that next thick area. And below that, we're starting to talk 3500, 3400 down in this area here. All right, so to get even more detail on this, go back and watch last week's video. And I did Fibonacci retracements. I showed you, where the downside possibilities are using both support and resistance levels as well as Fibonacci. So not to repeat it, doing the same thing each week, I would go back and watch that last week's video to get more detail on that. All right, so now let's move on to a shorter term chart. And so what I'm going to do is I'm going to change this to a daily chart. And we're going to change this to about 4 months so we can really just zoom in to see the last 4 months of trading. Changes to the 50 and 200-day moving averages since we are working on a daily chart. And we can see that over this last week here, guys, we've been trading down in an area that we haven't seen on the S&P 500 since back in October, all right? So, we pulled all the way back to October, retraced, really the last 4 months of trading, and, that hopefully will be enough, and especially the fact that we got clear down, and you can see here on where my cursor is moving on Monday's candle. As a matter of fact, let me just change this to a 1 month chart so you can really see this, but you can see how volatile Monday was. At one point on Monday the 24th, we were down over 4% on the S&P 500 and rallied all the way back from this 42.22.62 level that we hit to have a slightly positive day on Monday. So just some crazy trading here, guys, and really algorithms are the only thing that can that can do that, all right? And basically the same thing, and we'll take a look at a shorter-term chart, an even shorter-term chart here in just a minute. But on Friday, you can see that we traded below 4,300 and then ended up finishing positive, and you can see we finished barely below this 200-day moving average, this blue line right here, all right? So, it just, what a crazy, crazy week. But the fact that we ended the week towards the highs, not at the highs, as you can see on this wick on Wednesday the 26th. But the fact that we closed the week towards the highs is encouraging. But to get even more granular, let's change this to an hourly chart. And just get rid of the moving averages for right now. Keep this at 1 month, and let's see what we can see on this hourly chart. Okay, so now we're looking at a 1 month hourly chart. And you can see that on Friday over here where my cursor is circling, this last candle, guys, this really, really helped out the entire week. And I want to show you what I'm talking about here. And it really potentially changed the downtrend here, because you can see, and I'm just going to connect the bodies of these candles. We'll let the wicks go above this. But check this out. So this is a downtrend line from January 13th, and you can see we have been clearly in this downtrend, okay? But look at this last hour of trading on Friday the 28th. It broke above, and this is the only trading, right? The only close that we've had. We've had the wicks go a little bit above, but not much. But the only body of a candle that's been above this downtrend line since January 13th. So this is potentially good news, and it's encouraging, all right? But we will want to see follow through on this next week, and hopefully see some trading above 44.50 and then 4,500. This 4,500 level is really important, and you can see, just drop it right in there. You can see on this 4,500 level here, this horizontal line, guys, once we broke below 4,500 on the 20th, towards the tail end of the day there, you can see just how hard the market fell. And of course, 4222.62 is that low we hit on Monday the 24th. So it's possible that this is the short-term low. Especially encouraging the fact that we never revisited that. However, right, it'd be great to see a double bottom, but the fact that we broke this downtrend line on Friday and closed towards the highs of the week and had a very strong volume bar, guys, this is all good news in the short term. All right, but these are still very dangerous markets, so I wouldn't get overly confident here, but this is possibly good news. Now, if, however, right, the market rolls back over, we start to see trading below 43.50, especially on a daily and then weekly close, we know that we're potentially rolling back over here, all right? And if that does happen, then we know that that 4,200 level is that next area that we need to hold. Now let's go back and take a look at how simple market signals could have helped you in the bear market that started in 2000, that ended in '03, and then next we'll take a look at the bear market that started in 2007, that ended in '09. So in 2000, you can see that the risk signal, the market mode signal, would have turned red right here at approximately 1450 on the S&P 500. And this risk signal, the market mode signal, would have been red through the majority of this downturn, and then turned green right here just under 900 on the S&P 500. So think about that. Any of you that lived through this, any of you that were invested in the stock market during this period of time, as I was, right? I was working for Oppenheimer Funds, the mutual fund company, during this time. But you can see here, guys, this huge drawdown, right? This hurts, and it lasted for several years, and it just felt like every time we were starting to pull out of this, something would happen that would send us lower, all right? And these types of downturns, these prolonged downturns that last years, they are brutal. But think about how much knowledge you'll have when the risk signal is red whenever we get to the next bear market, right? Whether it lasts a few months or a few years, when you know that that risk signal is red, you know what to expect, right? Losses are much more likely than gains, and so you can take the proper measures to protect yourself, and you'll have realistic expectations as to what is probably going to happen. But then when that risk signal turns green, you know that the likelihood of you making money has substantially increased, okay? Now let's take a look at the bear market from '07 that ended in '09, and you can see here that the risk signal would have turned red right here, right around 1500 on the S&P 500, and you can see that the risk signal would have been red for the majority of the downturn. We did have one short green signal right here that lasted 1 week, and then the market rolled back over, and so maybe you would have had a small loss here, okay? But that's just the way any type of protective system works, guys. But think about this. Again, you could have got out, or went to cash or done whatever you wanted to do right around 1500 to protect your portfolio, and you would have had a green signal that would have came out around 875 on the S&P 500 right here in 2009. So 2 of these types of downturns in the course of a decade, and simple market signals could have helped you really protect yourself and really understand what was going on in the market and set realistic expectations for you in both cases. And when the risk signal turns green, as it did right here, you will know that the likelihood of you making money in equities has substantially increased. Why is simple market signals so important? Because market risk is the single biggest risk most investors face. And market risk is non-diversifiable risk. Market risk cannot be diversified away. And future investing success will require getting in sync and staying in sync with the stock market by using stock market-driven data. Simple market signals is built around a multi-factor stock market-based model. I'm going to repeat that. Simple market signals is built around, based on, a multi-factor stock market-based model. Simple market signals identifies the current level of market risk, giving you the opportunity to stay in sync with the stock market. Now let me share with you what subscribers are saying about simple market signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple market signals is the equivalent of having a personal money manager that keeps you invested when it counts and alerts you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice but this is the feedback that SC from Florida gave me, so I appreciate this. So again, SC writes that simple market signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well-off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the questions. So I produced it just as he wrote it. So the first question, what do you like best about simple market signals? What JV said was, one of the things I like best about simple market signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about simple market signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has simple market signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from simple market signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. There's two major components to the simple market signals proprietary model. There's the risk mode, the market risk level signal, and then there's the general trend indicator. Let's start off with the simple market signals risk signals. The simple market signals risk signals, the market mode signals, are simply green, yellow, or red. When the signal is green, this is when you're going to have your easiest, lowest risk profits. And this is when the market is generally in an upward market mode. When the signal is yellow, this is when we have a soft market and the market is generally sideways to slightly up or down in a yellow signal environment. And what you're going to find is when the market mode or risk signal, right, you can refer to it either way, but when the market mode signal is red, the worst losses, including bear markets, are going to happen in a red signal environment. So when the signal is red, the market is generally in a downward mode. Next, let's take a look at the general trend indicator. The general trend indicator measures the trend of the stock market based on our proprietary formula. The signal is either positive or negative. When it's positive, we're in an upward general stock market trend. When the signal is negative, we're in a downward general stock market trend. Now let's take a quick look at a few market mode risk signal charts for the last few years. We're going to start off with 2018, and you can see here what I was talking about, that most of your upward progress in the stock market will be made in a green risk signal environment. The yellow signal is kind of a sideways to slightly up or down signal, as you see here. And then the red signal, right, this is just 2018. We'll look at a few more here in a second, but you can see the red signal here that we had in the latter part of 2018. And then moving on into 2019, we came into the year with a red signal, and then it went green, and you can see the progress that we make here. Yellow, correction, green, yellow, green, yellow, green. So you can see that most of the yellow signals go back into a green. The yellow is kind of a short pullback in a lot of cases, but as we saw here in 2018 and what you'll see also in 2020 is the yellow signal can be that transition signal between a green signal and then a red signal, as we see here with the COVID sell-off in February, March of 2020. And again, as we see here, right, most of the upward progress in the stock market is going to be made in a green signal environment. So think about this, guys. As long as the signal is green, you can see there's just not a lot to worry about, right? And even most of these yellow signals, this is when we get that pullback, but it gives you confidence in knowing what the market is doing. Now let's take a look at a few charts for the general trend indicator. And just like with the risk signal, we're going to start off with 2018. You can see we came into the year with a positive signal, had kind of a chop here where we went back and forth between positive, negative for a little while in February, March. We had an outright negative signal and then went back into a positive. But you can see here, right, this sell-off that we had in Q4 of 2018, we've already looked at the fact that that risk signal went red, and you can see here that we would have had a negative general trend indicator signal as well. And then you can see here when the signal is positive, this is when you get the most upward progress in the stock market. And this takes us into 2020. Of course, we had the negative signal right here during the COVID sell-off in February, March of 2020. And this takes us again to the end of August, beginning of September of 2021. And you can see here positive, very short negative signal, and then a nice long positive signal. And again, just like with the risk signal, I'm stopping the data at the end of August. And if you want the most current information, please become a subscriber. The signals are delivered to subscribers in our weekly video newsletter. In the weekly video newsletter, you will get weekly updates on our proprietary market mode signal. That's our risk level signal. And of course, you'll also get the updated chart for that signal each week. You will also receive the proprietary market mode risk level signal on all 11 major sectors of the S&P 500. You will also receive a weekly update on our proprietary general trend indicator signal, and of course, the updated chart for that. You will also receive market analysis on over a dozen charts every week covering all major areas of the stock market, including several international charts. So I'm going to cover small, mid, large. We're going to cover both a growth and a value ETF. I mean, guys, this is going to help you understand what's going on across the board. Of course, several charts every week on the S&P 500. We'll cover the Dow. We'll cover the triple Qs. So we're going to cover pretty much everything in there, okay? And so this is going to give you a really solid base every week as to what's going on in the stock market over and above our proprietary information that we're sharing with you. And then depending on what's going on, there will be occasional bonus material, not necessarily every week, but occasional bonus material, and this will be anything additional. From week to week, these things will vary, but these will be important and timely things that I feel that you guys need to know at the time that the information is delivered, okay? So that'll be the occasional bonus material. To be fair to myself, I should be charging $97 per month or more for this information. However, you're going to get everything for just $19.99 per month. That's less than 67 cents per day. And to become a member of the channel and get access to the Simple Market Signals information, you will need to go to the Rodney E. Constable Stock Market channel. So depending on how you found the video, you may or may not be there, but you need to make sure that you go to the Rodney E. Constable Stock Market channel, and then you're going to click on this join button. Now, if you're not signed into YouTube, you will need to sign into YouTube. All right, and then once you're signed in, then you'll see this box pop up, right? Get access to exclusive perks when you become a member. So you click on the join button and you will see the information here, what you're going to get with your subscription, of course, your membership. And then you click on the join button and you want to add your credit card information. So as you can see here, you can pay with either a credit or debit card, enter your card number. Of course, the month and year of expiration, security code, cardholder name, and your billing zip code. So I'm going to fill all of this information in, and I will be right back. So once you hit that buy button, which is in the lower right-hand corner of that box, that previous box, you will then get this pop-up. Welcome. It's great to have you as a member. So then you can click on the See Perks. So once you fill all that out and your membership is established, then you will have access to the membership area where you will be able to see the perks, right? And then you go over to the community tab, and this is where you will have access to the various videos, and you just click on those and it'll pull those up. Okay, so I'm going to back up here, and so this is where all the training videos will be, as well as the weekly updates to the Simple Market signals that will be under the community tab. And that's all it takes to become a member. It's quite simple. And you will have easy, convenient access to this information. Everything is on YouTube in the members area of the channel, and everything is in video format. There's no emails to mess with and no websites to log into other than, of course, YouTube. So just to review the membership details, the video membership to Simple Market Signals through YouTube is $19.99 per month. That's less than 67 cents per day, and it's billed monthly on your credit card, or you can pay with PayPal. There are no contracts. You can cancel anytime, and if you do cancel, your membership will remain active for the balance of that current month, right, for that prepaid period, but you won't be billed for the next month. All memberships are controlled by YouTube, so if you ever have any question about anything, just Google it, and the answers should be out there. Some of my clients tell me they make tens of thousands of dollars per year from the information they learned from being a client of Simple Market Signals. It's not often you have the opportunity to invest a few $100s per year in yourself and potentially pull out thousands or tens of thousands of dollars per year from that tiny investment. This year, give yourself the gift of financial knowledge that can bring you big rewards over your lifetime. Now let's recap what you will get as a member. As a member, you will receive the weekly video newsletter, which includes the weekly update on the proprietary market mode, also known as risk signal, on the overall U.S. stock market. You will also receive the weekly update on the proprietary market mode or risk signals on all 11 major sectors of the S&P 500. You will also receive the weekly update on the proprietary positive-negative signal for the general trend indicator. You will also receive weekly market analysis on the overall market, and there's generally 12 plus and sometimes more than 20, right, depending on what the information I need to disseminate. But there's generally at least 12 plus charts every weekend covering all major areas, right? Small, medium, large, growth value, all of that, including several international charts. But all of this is over and above the proprietary risk signals. So the weekly market analysis alone, guys, is worth far more than the $19.99 a month that we're talking about here, okay? Plus, you will receive occasional bonus charts as deemed necessary and appropriate for whatever's going on in the markets, all right? So that's bonus material that I do throw in from time to time, and that can be extremely valuable to you. Plus, you will receive special midweek updates when warranted. So again, if there's something going on in the markets, if there's a signal change in the middle of the week, we will put out a midweek update video so that you can stay current on the information. We'll get that out as fast as necessary, okay? And you'll also receive access to the growing video library of best practice educational videos that are part of your membership, and that will continue to grow over time, all right? Again, you're going to get all of this for just $19.99 per month. That's less than 67 cents per day. So join now to start benefiting immediately from this valuable and potentially life-changing information.